Hey, welcome back to the channel HEX Tribe. In this video, I'm going to explain why HEX is similar to a high interest savings account, and I'm just going to start back from the basics about what HEX is in the first place, because I know a lot of you guys are new here, and a lot of you guys might be here because you saw the crazy price run up over the past 2 months in HEX, from 2 cents all the way to 12 cents, and now we're correcting a little bit, but I realized that with crazy price action like this, it brings in a lot of new people. And a lot of new people might just think that HEX is like any old coin that you just trade in and out of, and that couldn't be farther from the truth. So stick around till the end because I want to explain to you what you're actually holding when you buy HEX and why it's special and why it's actually important. So the use case of HEX is that it's similar to a high yield savings account or even a digital certificate of deposit or time deposit, otherwise known as a CD in the traditional financial system. But under the hood, from a technical point of view, it's actually nothing like these traditional boomer bank type vehicles that are actually pretty awful and pay pitifully low interest rates. Guys, take a look at the screen right here. This is the APY that you can get today for a quote unquote high yield savings account. Now, nowadays, even 3 to 4% APY is considered high, which if you ask me, that's just offensively low. I mean, that's not even enough to beat inflation, which at today's rates is 6 to 7%, probably even higher if we discover the actual inflation, because we all know they lie about the official CPI inflation numbers, when in reality the problem's actually much, much worse than they're letting on. So crypto and HEX in particular is like the way out of the traditional financial system, which is collapsing all around us, like we just saw with Signature Bank, like we just saw with Silicon Valley Bank, like we just saw with Silvergate, FTX. Guys, things are burning all around us. Centralized middlemen, the very middlemen that crypto was invented to get rid of, are crumbling. They're scamming people. They're not holding people's money. They actually have 0% reserves in the bank when people actually want to pull their money out. And so people are turning to crypto and to assets like HEX for a better way of, believe it or not, a safer store of value than depreciating assets like the US dollar for one, and especially other countries' currencies that might be even weaker, like the Turkish lira, for example. But if you're new here and if you're new to crypto and you just got into HEX because you saw the green candles going up and up and up every day, you got to realize that what you're holding is not just any other cryptocurrency. It's not just a meme coin. It actually has a very specific function. And that function was to replace a multi-trillion-dollar market that is the CD market. Plus, you can also add into that the high yield savings account market from the traditional financial system, which, guys, today the best one I see on here on bankrate.com is 4.4%. Guys, that's awful. You're never going to outpace inflation. You're always going to be stuck in the rat race if you're trying to make money and get rich with traditional old-fashioned vehicles like this. Now, crypto and HEX is a better way, and it is extremely volatile. We just saw the price pull back from 12 cents all the way down to 8 cents. So the price you pay for the outsized returns that are available in cryptocurrency is extreme volatility, and you have to realize that this is the game we're playing. This is the asset class that you chose to be a part of. And this should be obvious, but guys, things just don't go up and to the right forever. We have pullbacks, we have volatility, people get really excited about something, then the bubble temporarily pops, the price dips back down, that creates another buying opportunity, and then rinse, repeat, right? And on a long enough time scale, this is what we just saw with HEX over the past year. HEX dropped 90% over the course of the past year, and while everybody was naysaying it, everybody was talking crap, everybody was making fun of crypto as an asset class, the best possible time to be buying was when everybody else was scared of it and when nobody else wanted to touch it with a 10-foot pole. Anytime in the past 9 months, you literally had 9 months to buy HEX under 3 pennies. 9 months. But instead, what a lot of people did with that opportunity is they squandered it. They pulled their money out of crypto. Maybe they sold the bottom. Maybe they were just armchair quarterbacks pointing and laughing at all those silly crypto people. But hey, a couple of green candles and everyone's attention is right back. Pulse Chain Testnet V3 is out. Pulse Chain launch is right around the corner. It could just be a matter of a couple weeks now. And lo and behold, everybody's attention is right back into crypto. Kind of funny how that works. Kind of funny how people had 9 months to invest at the all-time lows of things like HEX, and they only get interested again after HEX triples or even quadruples in price, right? But now you're here, and as far as I'm concerned, you're still really, really early if you're watching this video. Guys, 10 cents is really nothing on the way to $10 or even $100. I know it sounds crazy, but the only way people make money in cryptocurrency is by long-term holding, not day trading in and out, and that's what HEX was designed to do. It was designed to be an attractive store of value, an attractive long-term holding coin, because that's really the only use case for crypto that has a proven track record. It's crypto being a store of value. See, Bitcoin was a store of value, and Bitcoin walked so that HEX could run. Bitcoin proved the use case that cryptocurrencies really do store value. The only catch is that they're extremely volatile. Bitcoin went from 1 penny to $69,000. But again, you think it was a straight line up and to the right? Absolutely not. So if we're zooming in on the chart for Bitcoin, it went from 1 penny to $30. And then it went all the way back down to $2. And then it went from $2 to $1,200. And then it went all the way back down to $200. And then it went from $200 to $20,000. And guess what? All the way back down to $3,000. Finally, $3K to $69K. Then all the way back down to $15K. Guys, think about the diamond hands that it takes to actually hold through that if you're experiencing it in the first person. It's easy to just look back in time and say, oh yeah, I should have bought Bitcoin in 2010. It's like, yeah, you should have, but you also should have held it. And how many of those early Bitcoin guys shook themselves out along the way? Now, HEX is designed to protect you from your own worst enemy, which is really your own psychology. And it allows you to lock up your coins and to stake them and to make high yield in the process. So we know crypto can be a store of value, and it is a good store of value in certain cases like Bitcoin and Ethereum. It's a volatile store of value, but it's still a highly appreciating store of value. In fact, it's the highest appreciating asset class in the history of mankind. And so we know this is possible, right? Now, what if we take that store of value narrative and we add a function onto it that is time locking and earning yield for holding your coins? So paying you to hold your coins, earn some interest on those coins in the form of more HEX, and effectively protecting yourself from your own worst enemy, which is you and your weak hands and your fear and your insecurity and your willingness to dump all the coins at a loss, or at the very least, not make the amount of gains that are potential to make. You know, HEX can easily go 100x from these current prices. But if you're going to get scared after HEX makes a 10x and then goes down 25 to 40%, then you're not really cut out for this game. But HEX helps you with your own psychology. It helps you hold through because it incentivizes long-term holding. It incentivizes the store of value narrative, which is really one of the only use cases that crypto is good for. Censorship resistance and stores of value. Self-sovereign money that you own that a bank doesn't own, so a bank can't secretly tax you and secretly devalue your currency through inflation, which is really just a hidden tax. And all national currencies trend towards zero eventually. But what HEX does is it puts the power back into your own hands, and it allows you to hold an interest-producing, a yield-generating asset that's disconnected from the banks, that stores value. Yes, it is volatile, but the price you pay for the mad gains is extreme volatility, and that's what crypto is, and that's what HEX is. So just hop on over to the website. If you really want to know what HEX is all about and what you're holding and why I really do believe HEX is so special compared to every other crypto, just read the website. It's really, really simple. Before you buy anything at all, you should probably read and understand what you're buying, because I think if a lot of people did this, they might think twice before trying to do short-term trading or going in for a quick flip, or even just thinking you're going to be happy with a 2x. Yeah, a 2x is great, but if you turn $500 into $1,000, that's not going to change your life in the grand scheme of things. If you turn $500 into $500,000, if you hold it for, 3 or 4 years, that could be life-changing to some people. So patience is rewarded, and HEX directly rewards delayed gratification. Look, HEX mining, this used to be called staking, right? Basically, when you time lock your HEX, people right now, including myself today, are earning an average of 38% returns a year. Now that sounds crazy, right? Compare that to 4.4%. It almost sounds too good to be true, but you got to realize this is the average, okay? That doesn't mean that everybody that stakes gets 38% APY. These 38% returns, this figure is based on the average length of time that people are staking in the ecosystem, which today is about 7 years. And yeah, you heard me correctly. That's a long time, right? And I don't know any other asset in all of human history where people are locking up and voting with their money, putting their money where their mouth is and saying, I believe in HEX for at least 7 years. So I'm going to lock up my HEX and vow not to touch it to make these really high interest rates. Now, people that are staking for longer than that 7-year average are making even more than 38% returns a year. Whereas people that are staking for shorter periods of time, from 0 to 7 years, they're making less than 38% returns a year. And the percent APY has a lot to do with the length of time that you choose to lock your coins for. So it's not as simple as, oh, everybody gets 38% APY. I want to be very clear. But even if you're staking for very short periods of time, let's say only a year or only 2 years, right now today, a 1-year stake in HEX, even just 1 year. And guys, 1 year goes by pretty fast, believe me. It might sound long to you, but you need to adjust your time horizon and fix your psychology, because if you're not staking for at least 1 year in HEX, you're not going to be able to see any of that life-changing wealth, okay? And right now today, a 1-year stake is producing about 9% APY, maybe closer to 10. So 9 to 10% returns for 1 year. And you guys need to realize that those returns are paid out in the form of more HEX, okay? So it's not paid out in dollars. HEX just produces more of itself when it's locked up and when you vow not to touch it, all right? So even a 1 or 2 year stake, a 1-year stake produces about 9 to 10% returns. A 2-year stake, I think it produces about 14%. You can go check on hexcalc.net, link in description below, or even stakehex.today. There's plenty of tools that let you estimate how many rewards you're going to get for locking up HEX for, X number of days. But you set the number of days. It's totally optional. No one's forcing you to do it. It's just you and the smart contract. It's just you and the code, either opting into or out of the whole staking mining mechanism. But I wanted to make this very clear to people, because if you don't know about the actual purpose of HEX, that it's designed to hold long term, that it's designed to store value, that it's designed to replace high yield savings accounts, well, then you're really not doing it right. Okay, there's a lot of people out here that I see that are brand new. It might be you, and that's okay, but a lot of these new people don't realize the life-changing wealth that can be generated by simply holding on a months and years timescale, not a days and weeks timescale, okay? HEX is a long-term game, and the only people winning in HEX right now are the people that have been locking their coins for the long term. You can make more than one stake. Guys, a lot of people, what they do is they make a staking ladder, it's called, or a mining ladder, whatever you want to call it. So they'll have, 5 different stakes. One at 1 year, one at year 2, one at year 3, one at year 4, so that they stagger their stakes out so that they always have some rewards coming in every year. They can sell some of the profits, they can restake some of the principal. You can really do whatever you want. It's your strategy, it's your life, and that's the beauty of the flexibility of HEX. But really, guys, I want you to read the website. I mean, if you don't know what you're holding, if you just rushed into HEX because of the green candles, great. I'm glad you're here. Congratulations for being here in the first place. But make sure you understand how it works, click around, watch all these videos, read all the content on here, read the FAQs, and I'll summarize it for you. Okay, I'll basically summarize why HEX is like a high yield savings account in a bank, but why it's also nothing like a crappy traditional bank. Those same banks that we've just seen fail time and time again. 2008, 2023, who knows when the next banking failure is going to be. In my opinion, the whole traditional banking system is at risk right now, and the US population, the global population, has never had less confidence in the traditional banking system. But luckily, you can opt out, you can choose the parallel financial system that's being built in a decentralized way that brings power back to the people, and that's basically the currency system of the internet age. Crypto really is the biggest revolution since the dawn of the internet. Crypto is democratizing money, just like the internet democratized information, right? Anyway, you've got the banks, you've got the bank time deposits, the CDs, the savings accounts, and then you've got the decentralized time deposit, which is HEX, okay? HEX has had 100% uptime for over 3 years now. If that's not safe enough to you, I don't know what more you could possibly want. HEX has been triple audited 3 times by 2 of the world's highest, most well-reputable auditing firms, and it's never been hacked. How many other DeFi protocols, how many other cryptocurrencies, smart contracts, whatever, can say that they've never been hacked? Very, very, very few. Uniswap is one, HEX is another. Now there's no middleman, right? Unlike handing all your money over to a bank that could choose to screw you over at any time, that could shut you down at will, choose not to give you your money back, decide that maybe you broke a rule in their terms of service that was way too long for you to ever even read in the first place. You don't have to worry about people. There's no middlemen in HEX. There's no middlemen in crypto. In real cryptocurrency like HEX, it's just you and the code. You either buy it or you don't. You either stake it or you don't. It's completely up to you, but that's also the beautiful thing. And with great power comes great responsibility, right? You truly own your own money when you're buying HEX, when you're staking HEX. And this scares some people, right? Some people want to trust a middleman like a bank. But when the faith is shaken in the financial system, guys, you don't really need banks. You don't really need anybody other than yourself and your own education. So trust yourself, trust your own judgment. And I think people need to stop looking for, a guru or a government, to be their daddy, to hold their hand, to tell you everything's going to be okay. Because every time we hand our power away to somebody else, they end up screwing it up and ruining it for everybody. So trust yourself and invest in your own knowledge rather than handing away all your power to a corrupt middleman that doesn't even have your best interest at heart. See, truly owning your own money means that if you lose it, that's on you. But it also gives you way more power, way more freedom. You can go to any country in the world, spend crypto anywhere that they accept it. It's peer-to-peer, borderless, digital, permissionless money. And no one can tell you what to do with it, and I think that's a beautiful thing. Again, like I said earlier, it's replacing a multi-trillion-dollar market. I mean, the CD market alone in the USA and China is worth over $7 trillion. So the total addressable market of a coin called HEX, HEX's total addressable market alone is more than gold. Okay, so if Bitcoin was trying to be digital gold, gold is only a $7.2 trillion market. So HEX can tackle the store of value of gold, but also much more than that. It can tackle the use case of high yield savings accounts and certificates of deposit. This is many, many, many more trillions of dollars in the traditional financial system. And so when it comes to product market fit, that's why HEX has product market fit, because people are looking to store their value and they're looking to make yield. And HEX offers these things trustlessly. HEX allows us to store value and to generate yield by trusting math and not man. If the code works, the code is law. And guess what? The code is immutable. It can never be changed. Nobody can sneak in through the back door and change the rules of the system. Unlike, the Federal Reserve, for example, that can just decide to print as much money as they want anytime there's a new crisis, which seems to be all the time these days. And again, here's the catch when it comes to HEX. Here's the catch when it comes to all of crypto, really, is the extreme price volatility. So with HEX, you have to be very careful not to shake yourself out. You have to see the longer picture. And the fact that HEX, quote unquote, crashing from 12 cents down to 8 cents is not going to matter to you that much when HEX is at $1, right? But in order for HEX to be at $1, it's not going to happen overnight. Things just don't go up and to the right in a straight line. You have to wait 1, 2, maybe 3 more years for that. I don't know. But I do believe that in 3 years' time, HEX will be higher than it is today. Whether that's 50 cents or whether that's $5, I don't know. But I don't care about the short-term day-to-day volatility because I choose to lock my HEX in the smart contract. I choose to lock it at go.hex.com. So if you haven't heard of go.hex.com, link in the description below. That's where you go for your HEX staking. And again, that's where the real winners in the system are making all their money. And like I said earlier, guys, the price you pay for extreme price potential and historic returns is that extreme volatility. But if you're locked up, it takes a lot of the emotions out of the equation. That's why I like being locked up. That's why I don't like trading my HEX or day trading or going in and out all day long. That's way too much stress, way too much pressure. I'm locked into the screen all day. I'm stressed out every time the price moves against me. I am my own worst enemy. And so if I'm locked instead, I can withstand the price volatility and achieve the life-changing historic returns from the highest appreciating asset in the highest appreciating asset class of all time. I'm talking about crypto, okay? 100x returns, 1000x returns. It's not possible. You're not going to get that at Berkshire Hathaway. You're not going to get that buying Coca-Cola stock, okay? It's really remarkable what HEX is, what you have here. And the asset class that you're in is like nothing in the entire world. The only catch is, again, that volatility. And how is this better than banks? Well, I could talk shit about banks all day long. Terrible hours, terrible customer service. FDIC insured? Maybe. They say that your accounts are FDIC insured up to 250K. Well, what if you have more than that? A lot of people had a lot more than 250K at Silicon Valley Bank. And a lot of people can potentially lose millions and millions of dollars, especially a lot of startup companies. And, they say FDIC insured, but are they really? Are they really? This FDIC insurance limit was made many years ago when inflation was much lower and the dollar was much higher. So we don't even know if they can actually guarantee that. They say they can guarantee that, but when have the banks ever told the truth in the past? The banks are known for lying just to make you feel comfortable enough to not do a bank run, to not try to withdraw their money. Because if nobody tries to withdraw their money, they can just keep lying and claim all the money is there. But in reality, guys, as of 2020, banks no longer need to hold any reserves. That means they don't need to hold any of your cash at the bank. It's all just made up imaginary internet money. And guess what? Our magic made up internet money, HEX, crypto, it's better than the government's magic made up internet money. So when you put your money in a bank, there's no telling that that bank even has your money in the form of cash on hand. All right. Not to mention, like I said earlier, pitifully low, offensively low interest rates. You can't even beat inflation with these interest rates, and they can shut you down at will. My bank just shut me down the other day. No explanation as to why. They just decided to close their doors and forced everybody out of the bank. So yeah, my bank account got shut down the other day. No explanation as to why. And this wouldn't have happened if I was just holding my own money. So a real pain in the butt. Just one of the many reasons that holding your own money, holding HEX, locking it up for the long term is infinitely better than everything that could possibly go wrong with the terrible banking system that we have today. All right, so I hope you learned something when it comes to HEX, when it comes to investing for the long term. If you're brand new to HEX and if you're here experiencing this euphoric price rise in the past couple of months, congratulations for being here. Just wanted to make sure that everybody knows where you're at and what exactly you're holding, and especially why HEX is like a high yield savings account in a traditional bank, and also why it's under the hood. It's actually nothing like a real bank account. It's actually way, way better. So now you have a decision to make. Do you want to stake your HEX? Do you want to leave it liquid? Do you want to be a day trader? That's entirely up to you. I think you guys know my point of view on things, and from my historic experience, from the people I know in real life, and me being example number one, the real money is made by locking for the long term and ignoring the day-to-day price volatility. But, you do you. You can trade if you want to. I'm not going to tell you what to do. Take responsibility for your own actions, think for yourself, and whatever happens to you is completely your fault, both good or bad. That's the beauty of crypto. Self-sovereignty is the name of the game here. Now, I want you all to experience the maddest of gains, and I want all of us to get rich together. I really do. But at the end of the day, that's going to come down to the decisions that you decide to make. I can't think for you. I don't put your finger on the buy or the sell button. That's up to you. So take responsibility for yourself. Like, subscribe, and have a good rest of your day.